The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome, everyone, to another edition of Zacks Rank Buy. I am Brian Bowen, and I am the aggressive growth stock strategist here at Zacks, and I'm here with two more aggressive growth names for your radar screen. Let's get right into it here, and the first one is Jinko Solar, and that's JKS is the ticker. JKS is right there. It is a Zacks rank number one, and that gives it a strong buy. And we see an A for value and an A for growth. You know, normally I'd like to see a divergence. I like to see the growth score strong and the value score weak, but I am going to go ahead and accept this one for having an A as well for value. But let's go ahead and take a look at why this stock is a Zacks rank number one. And we can see mostly the reason is that earnings estimates are moving higher. If we really look at the current quarter, we can see like there's that big move, that 8 cents 90 days ago up to 23 cents. But the Zacks rank only looks at things in the last 60 days. So we're just looking at a minor 2-cent increase here, but we're also seeing a 3-cent increase here and just a 1 penny for the full year, just 1 cent. But next year, look at this move from 3.23 to 4.23. That I don't know. That seems like $1 to me. $1. That's a good move right there, and that's the big move, and that's what obviously everyone is keying in on. Not so much on the earnings history here. We see a lot of red numbers recently, so not beating the number, not what we want to see. But I mean, this thing is what we want to see. This move from 3.23 to 4.23 a year out. That tells us analysts are really expecting big things next year from solar names. If we take a look at why this stock is, really that value score of A, we can see a 6.5 times forward PE, and that's pretty good to see there. We see 15% top line growth. I like that. Price to book, the value players have got to love this. It's under 1. Price to sales well under 1, so you're suggesting that your sales necessarily aren't fully worth what the market says they are, or what the stock says. So something to keep in mind. But that book score or book value ratio is very, very low. Let's take a look at the chart. We can see there's been a lot of up and down, and really management needs to get it together here. You can see the string of bad. Oof, boy, I count there 6. 7. How many? There's so many misses. Looks like the stock bottoms out here at 10, but we're back up to 20. If these estimates, as you can see here, keep moving up, the stock could end up in the 25 range in the near future. All right, so I like solar. I like a lot of the solar names right now. So keep that one on your screen. Let's move next to North American Construction Group, and that's NOA. NOA is the ticker. NOA, North America. It's a Zacks rank number one. That makes it a strong buy. It is also an A for growth and an A for value, and it has that coveted A for momentum. Everything coming up A's. Wow, A plus. That sounds like a great report card, something that would never happen to me in real life. Even in my dreams, I would never even dream so high as to get all A's. It was usually dreaming about getting C's. Because I was D's and F's, doing fine. That's what I told my parents. D's and F's were. That's why I'm here at Zacks. All right, so let's look at these estimates here. We can see a little bit of an increase from 22 to 26 cents. Next quarter, 25 to 30. And we see that really adjust into the full year number, $1.16 to $1.35. That is a big move higher. And then next year, $1.36 to $1.47. It's a move higher. We like to see that. Here's a big beat where we're expecting a loss, but we get a break even. That's good. This looks like we didn't have an estimate, so we don't really want to think too much about that quarter. On the money there. And then a nice beat here most recently. So, pretty much good reporting history, good estimates moving higher. We take a look at the valuation. This is something that you're going to like to see here. This 8 times forward earnings, 2.3 times book. 54% annual revenue growth. Margins going the wrong way here. So, that's not necessarily what I want to see. I'd like to see those increase. Maybe that's why our PE is down so low right now. But on the whole, I like this name. I held this name in stocks under 10 for quite a while. And then I think we sold it up in this neck of the woods. We should have bought it again when it dipped back down to 8 in this range here, but we sold up here. I think we bought down here. Probably bought after this big beat. I think that's what alerted me to this name. But I think building the wall and all these construction plays, there's an infrastructure bill, there's all sorts of things happening here that a name like this could benefit from. So definitely keep NOA, and that's NOA, on your radar screen for aggressive growth. Well, that's it for this week. Be sure to join us next time when we take a look at 2 more aggressive growth stocks for your aggressive growth stock radar.